Hey guys, Brian Horton with BK Trading Academy. What is top-down analysis and how do you use it? Well, top-down analysis is when you actually start from a higher time frame. You're getting the bigger picture of your chart all the way down to a lower time frame so that you can execute with the best possible entry. I'm going to show you why we do this typically and how this will significantly decrease your risk when you're trading. So let's go ahead and look into it, dive into it. I hope you guys take this trade with me. And I want you to give me your comments, your feedback. In the meantime, guys, I appreciate it if you like and subscribe to our channel as well. So without further ado, let's get into it.
Yeah, I know I got problems and I don't know where to go. I don't want to put the blame on you.
All right, guys, as promised, EURUSD. We're going to start off on the monthly time frame. Remember that top-down analysis I talked to you about? It starts like this here. So why the monthly time frame? Because it gives me a bigger picture. Now, typically, you don't have to start on the monthly time frame. You can start on the weekly or the daily. But as long as you can spread your chart out and see the bigger picture, you're perfectly fine. So one thing that I like to look at is where price is at against all of the noise here, against all of this data here. So as I spread my chart out a bit, now I'm looking for key levels. Key levels mean these areas where price turn around in which we believe that price can do the same thing in the future. So I'm just going to draw my rectangle just like this here. This is a key level right here. Why is it a key level? We see wick rejection here in the past. We see candles bouncing off multiple times. We see it even right here. And so this is a huge turning point because last time when price came to this level, it shot to the upside 1,209 pips or so. Again, second time it did that, it shot to the upside 1,100 pips or so. Third time, it shot all the way up 2,144 pips or so. And then even after that right here, it shot up 400, almost 500 pips or so. So that's where we're at. This is our key support level here. Now, price isn't nowhere near it right now. Once we zoom in, you'll be able to see. But now I have a perspective of what I'm going to do. So now I formed a bias in my mind that I would like to buy. So I'm going to grab my trend line and do something like this here. Because the last few times price was here, it shot to the upside pretty significantly. So now I have a bias to buy, but I'm not going to just buy at any point. That's where top-down analysis come in. So I'm going to go to the weekly time frame. And now it gives me a clear perspective as to where price is at and what's going on, okay? So I'm going to delete these circles here. We're going to clean up our chart and analyze it even further. All right, so we see that price had tested these levels here multiple times. So we have 1, 2, 3. This one almost got close to it, but it's close enough. 4. And now I'm going to get my rectangle tool and just draw it like this here, okay? I can even extend it over here. So remember, these levels are significant because when it came to this level, look how far it dropped. So once it dropped here, almost 80 pips, twice, 3 times, even the third time it dropped even further down. And if I get my measuring tool, almost 700 pips or so, even further than that, okay? This time right here, it didn't quite get to it, but it was close enough. It dropped 500 pips or so, right? And then the last time right here, it dropped 430 pips or so, right? So this is considered another significant level. So now we're pretty much playing ping pong. This is the bottom pong here. This is the top pong here. So as price goes up and down, we can almost guarantee that price will react. We want to buy at this level. We want to sell at this level. Now let's zoom in to see exactly what price is doing. Now I'm going to the daily time frame. And now that I have my red rectangles drawn out, I have a wide perspective of what may happen, but I want to narrow it down because I want to get in at the best possible price. So remember, my bias is long, so I think that it's less riskier if I buy, but I don't want to buy when price is up here. I want to buy when price is down here. And since price isn't down there, I'm looking at the next closest zone here where it's a little bit more riskier, but I'm interested in selling. So look how many times this touched this area here. Look how many times these candles have touched this red zone here. So I'm going to clean up my chart just a bit so you can see it. So we're going to count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. About 10 times in the month of May, it touched this zone here. So this tells me one or two things. This tells me that buyers love this price. Sellers love it even more because every time price came to this area, sellers took that discount and sold it here, okay? So sellers love this price. However, buyers are really interested in this price because it touched it multiple times. So price shot up, meaning bought, multiple times, 10 times, and now it's coming to retest this zone for an 11th time. So I believe in the short term, price is going to come back and retest this zone. Now, keep in mind, buyers have touched the zone multiple times, but sellers took it out. Eventually, I believe buyers is going to break through the zone and outbuy the sellers. Okay. So let's look at it as a ping pong match. Eventually, buyers want it so much that it's going to break this zone to the upside and then come back and retest. So remember, if I go back out to the weekly time frame, we're in an uptrend. Okay. So you can see that I'm in an uptrend. So that means eventually that uptrend is going to have to continue. It's going to break, come back and retest this zone. It may consolidate a bit, break higher, retest that zone, and so on and so forth. So we're in an uptrend, and that's my bias. All right. So what I'm doing now is top-down analysis. I'm going to go back to the daily, and now I'm going to go to the 8-hour. You can go to the 4-hour. It just depends on what you want to see. I'm going to clear up my chart just a bit here. And now we're looking at the structure of each candle. Okay. So you can do anything like this here. You can even draw a kind of a trend this way here. We can see prices headed up. We can see that this is a minor resistance zone. So price may even come to this area and shoot down and kind of do something like this before it goes higher. So this can take some time to play out. But when it plays out, it is huge. And that's why we encourage you, especially in our academy, to set as many alerts as possible, because when you least expect it, your platform will alert you saying that this zone, that price has hit the zone, and now it's time for you to react. So I'm going to give you the specific price for you guys to put in your charts for an alert. My number is 1.10808. That's the price that I'm looking to get an alert from. And so as price goes to the upside here and hits my alert, then I'm going to reevaluate. So I'm going to see if there's going to be signs of sellers coming in again, like it did in the past right here, where it's sold, red candles here. If something like that happens, I'm interested in selling temporarily. Okay. Remember, because I'm in a buy, I'm in an uptrend overall, but this is temporarily. I'm looking for wick rejection, something like that, or I'm looking for small white candles, maybe a red candle, and then I'm interested in selling as well. Okay. Now, if it doesn't happen that way, then what I would be interested in is a break and retest. So just as I mentioned to you before, here's our break and retest. It will look something like this. Price is eventually going to break above it. We're going to look left to see where it can possibly go. And so as I scroll left, I'm looking for indicators such as this here, or I'm looking for candles and wicks where price broke to before it shot down. So I believe that this zone may be a nice zone for it to pull back. And then as it pulls back, that's where I would be looking to buy. I'm not looking to sell at the pullback because that's a bit riskier. It can continue even higher possibly because we're in an uptrend. But if it does and pull back to this structure here, then I am interested in selling. So you can see that I started from the monthly, went down to the weekly, the daily, then the 4-hour. Okay. And so you only need to really go to the lower time frame when you're ready to execute, when price is close to your area. So as price moves closer to this zone here, then I will be moving into the 30-minute, 1-hour time frame or the 30-minute time frame. And then I want to look at the candle behavior from that standpoint. So when price is in this area, I want to see if there are smaller buy candles. I want to see if sellers are starting to dominate by looking at the structure of the candle before I even consider buying or selling, or are buyers strong enough that it's going to break it, then come back to retest. And that's when you will start looking at the 30-minute, the 15-minute, and so on and so forth, is when price gets close to your area. Okay. You wouldn't even realize that this is an area unless you started on the higher time frame. So that's why it's important to start on the higher time frame before you even consider going to the lower time frame. Oftentimes you won't know how many times that I've heard that people start on the lower time frame and they buy, they have no clue what the bigger picture is. They're buying when they're in a downtrend. And you don't know what trend you're in unless you start from a higher time frame. So that's my perspective with Euro USD. And guys, if you want a clear understanding of this trade, you already know that you can go into our private community here. And then you want to go to live trading replays, where you will see a list of our live tradings that we actually do every single Tuesday, Wednesday, and Thursday with our students, where you can replay it. You can see our price points. You can see where we're selling at. You can even answer questions. So we answer your questions during our live trading every Tuesday through Thursday, New York session. So That being said, guys, let me know if you agree with this. If you have an opinion as well, we accept all opinions, guys. But overall, guys, the opinions, we want to make sure it makes sense. It matches price action. We're trading the way the banks trade. We're riding on their coattails. We don't want to just buy or sell just because it looks attractive. And that's how you minimize your risk, by simply doing a top-down analysis on every single pair that you get into. Now, if you're a swing trader, you don't necessarily have to go to the lower time frame, just as long as it's within that area. You don't mind if price goes against you 50 or 60, 70 pips or so, because you're swing trading. You're in it for 3 to 4 to 500 pips. However, if you're intraday trading, or even if you're scalping, the lower time frame would be good for you guys. So that concludes my video, guys. I hope you enjoyed it. Don't forget to like, subscribe, show us some love. We really appreciate that. And we will always provide you with premium trading content so that you can become a better trader. We hope to see you on the inside. Until then, have a blessed day.
Sitting and thinking about my